So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, Kirk here again from OptionAlpha.com, and welcome back to The Daily Call. Today, I'm going to go over my top 4 reasons to sell straddles and strangles. So straddles and strangles, for those of you who are not familiar with them, are pure naked option selling strategies. Straddles are where you sell the same strike price on both sides. So you sell the 100 call and the 100 put. With a strangle, you'd be moving further out from where the stock is trading. So if the stock is trading at $100, you might sell the 105 call and the 95 put. But in either case, they're both naked option selling strategies where you have undefined risk and you're not buying any strategies or creating any spreads. Now, I'll tell you honestly, these are 2 of my favorite strategies, and we do very synthetic versions of these a lot. So we trade a lot of iron butterflies, iron condors, but we also do a lot of straddles and strangles. I think it'll be personally interesting. I'm interested to see what I do personally with myself. It's like I'm talking to myself in the third person. Like I'm interested to see what Kirk does, my new self, when we get this new auto trading platform live, with how we're going to go about trading straddles and strangles versus iron condors and iron butterflies. I imagine, and I hope, that I start gravitating a little bit more towards pure naked option selling in its raw form, because I want to not only do it for my own account, but I want to prove its validity in a more public way with these auto trading bots, which you can then see and clone and kind of mimic what I do from that side. So to get back to why I think that these things are so good, here are my top 4 reasons, right? Number 1, it's pure option selling. So we said that already, but what does that mean? It means that in this case with straddles and strangles, you're not buying any options. So you truly are doing option selling in its purest and most raw form. But that means that you have additional risk, right? So the downside to that is that when you do pure option selling, you take in more money, you generally have a little bit more risk. My number 2 point is that they're really easy for adjustments. So unlike iron condors and iron butterflies, where you have to worry about the location and the strike prices of the long legs, with straddles and strangles, it's a lot easier to adjust. You can still go inverted, you can still roll. It just makes it a lot easier because you don't have to worry about extra contracts. So as far as management goes, it's a lot easier. Number 3 is that they have faster decay. So again, because they're pure option selling strategies and you don't have to buy another leg to create a defined risk position, you generally see faster decay in the value. And most of the time, that means that you can take these positions off a little bit sooner when they hit their profit targets. If you're trading a spread might take a little bit longer. As you go through expiration, you might have to hold it a little bit longer before it hits its profit target. And number 4 is that it's more profitable if you can handle the volatility. So one of the things that we learned in our profit matrix research, which you can check out on our website, is that straddles and strangles absolutely are very, very profitable strategies, but the profitability of those strategies comes with a little bit more volatility in the account. Meaning that with the undefined risk nature of these positions, you're going to see a little bit more ups and downs along the way, but ultimately you should generate more total dollars than other strategies out there. So again, that's one of the reasons why I think we'll be gravitating maybe a little bit more initially to straddles and strangles in its purest format when we release this new auto trading software, so that we can see some more of that long-term profitability start to shape out. And that's going to take some time. I mean, it's going to take some time for these, bots to really mature as far as number of trades and frequency. But ultimately, and I'm thinking like 4 or 5 years out from now, that's where I want to be. I want to have a good backlog of those trades in place. So hopefully this helps out. As always, if you guys have any questions or comments, let me know in the comment section on the website or on Facebook or Twitter. Hit us up anywhere. And of course, add your questions in. We're always looking for new questions for the daily call. Any topics you want to see me covered, just shoot me an email or head on over to optionalpha.com/ask, which is the best way to get your question answered here on the show. Until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.